What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. If that sounds like something you are interested in, consider subscribing, as I do provide daily content at Hemi137 on X as well. And I do periodically post additional videos here just on current events. So, with that being said, remember to hit the like button before we get started, and let's dive right in. Now, over the past previous week, we've had some big events, and this is something I've talked about leading up to this. What we're kind of teetering off towards the tail end of earnings. In my opinion, earnings will continue on for the next month and a half, but you have to ultimately understand after this week, the market's pretty much has it set to where it's going to pick a direction, and that is because we have Nvda earnings finally here on Wednesday, and that's going to be very critical, as essentially this big bull run that we've had over the past year has essentially all been coming from Nvidia and the crazy numbers it's been putting up lately. If they are pencil whipped, we don't really know. There's a lot of rumors behind things, but as of right now, they are absolutely crushing it. Despite some of the other data that we've seen, again, they're still essentially producing a great chip, and we are in the age of AI. And right now, and what I've talked about over the past couple months is we are in the building stage of building out infrastructure to support AI, and you're seeing that in all the cloud as well. So this does support that aspect of it. And understand, if you understand chips, NVIDIA owns a huge part of processors at this point. I believe it's roughly around 80%, if not a little bit higher than that. And then not even close would be AMD, which has a fraction of that, and then everybody else. So that kind of puts things in perspective how big NVIDIA is in the massive power it has, so much so that NVIDIA essentially has placed itself as a number three, the third biggest US company out there right now, only following essentially Apple and Microsoft at this point. And I think before the end of all of this, it will be number one, because I do believe we are in a Cold War like atmosphere with China and Russia for the race towards AI, much like the moon landing back in the days. So I do believe that is very much the current situation that we're in, and glowing and essentially talking about the heightened stress that we have around the globe in election year across the globe as well. It is very much a crazy current predicament that we're in, but we are talking about the stock market. So the past week we've had some big events, but ultimately, again, a lot of it isn't going to do too much. Again, I think we are ultimately waiting not only for Nvidia earnings, but we do have the March 11th deadline as well. With the Fed funds rate, we want to know what's going on with that and determine if banks will have to hold more resources than what they currently are, as that will finally be lifted since the pandemic. Essentially, they haven't had to have any reserves, and now they are being forced to have to do so because there's a lot of stress on the banks. If you haven't noticed, we've lost some banks. A lot of banks are still very much underwater. And again, nobody's going to know that unless those true numbers were brought to the market, which they aren't brought to the market, because if you realized how much they were actually underwater, people would be pretty fearful, to say the least. So, with that being said, they are closing a lot of branches. And something I've pointed out multiple times, even though we may not get bank failures, you have some banks that essentially on this go around have dwindled down to zero, lost 60% of their value. A lot of them, I think it was a New York bank that essentially kind of took on First Bank, First Republic. When it went down, it took on some of its assets as they were selling it off, as that bank essentially got crushed. And then now it's so much so underwater that it's essentially lost all its value as well. So again, they're trying to prevent bank runs, as if everybody starts pulling out their money, it's going to absolutely crush the market. And so they're actually monitoring that. That news did come out a couple of weeks ago, that they're monitoring social media. The federal banks across the globe are monitoring what's currently going on. And something I didn't write down here that are just coming to mind as I'm speaking is officially this past week, Japan, Germany, and the UK have announced they are officially in a recession. It is only the United States that has not said they are in a recession, and that's only months away before us too will be in a quote unquote an official recession. Again, once that happens, once there is an event that scares Powell, we don't know what that's going to be, but when it happens, it's not going to be scheduled. But when emergency rate cuts start coming, that's when we price in a recession. And then from that point, I believe we will get into one of the biggest bull markets that there will be, as essentially the money printer will be turned on, because essentially I think they're trying to drown out the dollar. The dollar knows it's under attack, and it's not going to be an easy case. It's not going to be an overnight. The dollar is just going to go away. It's not that simple. It is too. There's too many countries out there. Too many things that are tied too closely to the dollar for it to just evaporate overnight. It will take some time for that to happen. This is what a lot of people talk about a lot of times. Even the Roman Empire, it took a long time, even despite its downfall, it still took, I think, 50 years or something for them to completely roll off of it. And so you're still looking at a while before people can completely get rid of the dollar. So people are transitioning to CBDCs, cryptocurrencies, as another means to potentially get off or roll off the dollar. But we'll continue to watch and monitor to see how that goes. So with that being said, again, there's still some very important things going on right now. Not as much as we've had when we had Super Bowl week and there was just overload of information, but there's still very good things that came out. And so one of the things is we did have Shop earnings. There was a couple of earnings that I was kind of watching, but Shop really drew my attention. And I've listed out like certain earnings I'm watching, but I'm not really going to speak about them unless I really feel like there's something that draws a lot of interest from me. And Shop, I've always liked Shop as a company. I think they're very different from a lot of aspects. And when you want to talk about starting a business, it's pretty much like a one click and bam, you're up and running kind of thing. And those kind of things, even with sales, is so much easier. And if you have the reputation already built out there like Shop does, it's easier to get people to your site and stuff like that. And so Shop had a phenomenal earnings despite, them selling off. They have tons of great products to market products and everything else. I really do like Shop's model. I don't like the price tag, even though it's down from the peak of where it was before the pandemic when it crashed down. I think 25 was its lowest at one point. But it's definitely one I do want to keep on the radar for potentially picking up as well. I don't like to expand to too many different things. There's certain specific ones that I'm watching, but I really do like Shop. If I could pick up some Shop as well on this dip, on this pricing of a recession, I would definitely like to grab some Shop for sure. Again, just depending on what happens, but I really do like Shop. And if it's something that you're interested in, I highly suggest that you look at the balance sheet. I don't do a lot of those kinds of things on this channel. I just try to talk about the general market sentiment and then scheduled events, and then go over some technicals to know what kind of plays to go over. But as far as an investment, I do really like Shop. Again, I highly suggest you to check out the CEO, see if you like him, and then also look at the book and essentially the balance sheet and see how well that they're doing in the products that they have. And again, it's one of them that I think is very prime. I don't really like to bring up a lot of tickers. There's only certain ones that I think are valuable. There's ones that I play all the time that I don't feel like you are worth investing or mentioning because it's a quick play. But the majority of the ones that I do highlight on here are ones that I like to invest in and like to play a lot. And so there's certain ones I do like to play. I have like a good like top 15 that I play like almost all the time. And then but there's primarily like a top 5, and then there's like a top 15 that I really do like that is expanded out just depending on when they start declining, especially like you want to talk in pricing and recession, but that's one I did want to mention there. So with that being said, we did also have a core CPI. It came in at 3.1 versus expected 2.9. Now, this is something that is very concerning. I've talked about pencil whipping, and I talk about going, 5 to 6 layers deep than just what is headlined on here. Even the 3.1, it is still higher than expected. And what is really concerning is when you look at the numbers, it shows that year over year, it's only increased to 1.2%, which is a lie. How can you get 1 5.2% average when your lowest increase is 5.9. And you're talking about, I've talked about this before about how, inflation, once inflation first hits, it's kind of all over the place. It bounces all over the place. But right now, it's really ingrained in food. It's really ingrained in essentially shelter and in energy. And if you haven't noticed, those are the three biggest costs that people are paying 10 times the price. That's not even including insurance that you have to pay for these things, which is absolutely absurd as well. And so I think the highest one I want to say is car insurance, and I believe it's at 22%. It's at something ridiculously high. And so I'm just looking over my notes here. I had just seen it somewhere. Yeah, it's car insurance inflation is at 20.6%. Transportation inflation is at 9.5. Hospital service inflation is at 6.7. One of the lowest is, food away from home inflation is 5.1. So explain to me how inflation is year over year only up 1.3%. And you're seeing this across this, and this is why they have like multiple reports. They have headline inflation, they have core inflation, they have not inflation, but the super core as well. So they break these things down so many times so that it confuses a person to really understand what the overall picture is. And so just to say that it's only gone up 1.2%, that's not the average of the numbers you're giving me. The lowest number is 5. I think the lowest is 4.3. And then your highest is at 20.6. So explain to me how there's a 1.3 average in there. And so again, a lot of these things are very much pencil whipped. Even the core PPI came in at 0.9% versus expected 0.6%. So things are starting to creep back up. And this is what is concerning, is that we bring this back to Powell and the cut. People are anticipating the cut, so much so that when these core numbers came out, they essentially obliterated the fact that we're going to cut in March. They moved that by the time before this was actually reported, they were assuming it was going to be in June was going to be the cut. Now they're saying it's not going to even be till July. Higher for longer is what they're saying. But the problem is there's so much pressure on the banks that Powell may not have a choice but to cut to provide some relief. Now, how much relief is that actually going to be is the question, because as soon as he cuts it, inflation is going to start running higher. And when it starts running higher, that 9.1 you saw, about a year and a half ago is going to be higher than the 9.1. And again, these numbers I think are very misleading. I think it's much higher. And we've talked about this. The real inflation is much higher than what is actually being reported. So telling me going into the supermarket, buying gas, and paying for your home has gotten cheaper over last year. I've noticed it's gone down a little in some aspects, but then it's starting to shoot back up. And that's the problem. This isn't how inflation works. It's like a roller coaster. You get small dips and you get big rips. And of course, when inflation first hit, you saw inflation across used cars and everything else. But now the demand is everything down to the basic necessities. So those things are going to have the most. And understanding where that currently is, right? Of course, you're going to see a decline in cars. Cars are getting at some back to normal prices where they should be, right? Trucks were selling for $100K a pop, which was absolutely absurd. Now their supply for cars is becoming so much that prices are starting to come down. This is what we've talked about for this whole couple times. This is how it works. Inflation runs across different parts where it's the demand is. Now there's no demand in cars. The original demand, why there was so much inflation in used cars before, was because during the pandemic they stopped producing cars, and so the demand was small. But now people can't afford. People actually keeping their car longer because they can't afford a new car. And so now what's happening is the supply is building up, so that drives down the prices. It's the same thing we're seeing in automobiles right now, where the prices are starting to tumble. Now we're starting to see that in the housing sector as well. That's the next biggest piece to this puzzle. So with that being said, I mean, that puts us in a really a crazy predicament with what's going on with core. and a lot of the things I discuss on this channel and things that you need to be aware of, and not just go off of headline news, right? Like there is, I think there's just an obligation as a member to society in the U.S. particularly that you know exactly what's actually going on and not reading headline news. And I know it's easy to just read headline news and not get tied into politics. That's why I am as well. But when you start talking about finances and stuff like that, it's important to know what to be paying attention to, what's actually going on. And the deeper you get into this thing, it can become very much a rabbit hole. But with that being said, I mean, inflation is still running rampant. And in the next year, it's going to be a very important year in how things are being kicked off here. So we need to pay attention to that. So this week, what do we got for this week? This week, Monday is President's Day, so the market is closed tomorrow. So do keep that in mind. So we only have a short week this week. Wednesday, we do have the FOMC meeting notes to give insight into the last meeting that we had. Could provide some good detail there. So the market might get some pretty volatile on Wednesday afternoon. There is no Powell on Wednesday. It's just the notes that come out. Although throughout this week, we are going to get a lot of Fed members speaking. So do keep that in mind, because monetary policy, we don't have monetary policy until the 20th of next month. So keep that. This is the 1 month we have that gap between now and the next monetary policy. So again, it's not saying Powell can't come out and start cutting rates. If he does start cutting rates now and between then, that's telling you that there's a big problem, and he needs to start cutting rates, which again, I feel like with the amount of layoffs that we're continuing to see throughout the week, and I'm not talking about little layoffs, I'm talking, 10, 15, 20% of workforces are being chopped off of across all industries, and will continue to remain that as long as interest rates are this high. And considering where inflation was, that is the concern. That moving forward, it's going to get a lot worse because Powell can't cut rates yet. It's too early to cut rates yet, unless he's already getting pressure that he needs to start cutting from a lot of different people. But I give it to Powell in the aspect that he's holding still and holding up rates. How long can he do that before his hand is pressured? We do not know. But until that's announced, the market will continue to go up. Despite everybody else in the world saying that they are in a recession, we are not immune to a recession like everybody else. That is not true. We're all based on a debt-based system, and people have tons of our debt. And when they are in a recession, they're going to start selling bonds, and that is going to put a lot of pressure on our structure, our banking structure, and is going to be a problem and going to cause major issues. And so you can't think that we are, again, immune. So with that being said, we wait and see. Right now, like I talked about, we're really watching headline news to see what happens. So monetary policy is until the 20th. Next core is until March. So March will be a big month. Again, March 11th. So just before we get core next month, we are going to get the bank reserves. We're going to have to find out what does happen with that, and if that's going to be reestablished, because if it is, that's putting even more pressure on the already crippled banking system. So do keep that in mind. That's going to be very important on March 11th. Now, upcoming earnings, again, none of these are going to have, aside from Nvda, again, after Nvda, there's going to be earnings to the end of the March, and then we'll restart the cycle in April. But again, ultimately, understand that as of right now, once Nvda is done, the market's going to go a month and pretty much already have its direction in which it wants to go. Now, can we price in a recession at that point? It depends if we get something that's going to force the hand of Powell to start cutting rates. Again, I don't know what that's going to look like. If we get rid of the Fed funds rate, that could be a big problem coming up. So that is something that we definitely have to pay attention to, because if that's gone and banks have to hold reserves, they're already way underwater. They're not going to be able to do that. And so March just could be the day in which everything just starts crashing, which would make sense because that's when we normally pull back. But unless you hear that the Fed are cutting rates, the market will go up. Yes, we can correct a little bit, but unless there's actually a cut, We won't price in a recession until that actual cut occurs. So go off the premise that as of right now, we know March will pull back naturally. And until that rates actually cut, again, you need new fear to drive the market down to price in a recession. No one's going to come out and say it's a recession. What's going to happen is you're going to have Powell come out and say, hey, we're cutting rates because of X, Y, and Z. And that's when we start pricing in recession. Until that happens, you're just going to get a normal March pullback. And that's what we're aiming for, is just a normal March pullback. Just at the same time, if we do get a, hey, Powell is starting to cut rates, then that would be okay. Well, now we're starting to price in a recession, so get ready to start buying back. Is what was my point. But we don't know how much lower, and understand that, again, if he starts cutting, a price in a recession takes a while. It could take up to like 2 months, whatever. Average recession price in is roughly around 42% from peak. But again, also ultimately understand from that as well is that we are at historical numbers for the M2 money supply, which is huge, which shows us a lot. It showed us why inflation skyrocketed, because the M2 money supply shot up like a bat out of Hades, and then it's also gone and negative. It's gone into territory we haven't seen since the Great Depression. There is a bigger move coming. You have to be patient. You don't know how this is going to time out. Again, the linchpin for all this is when Powell cuts rates. That is your linchpin. That's what you need to be watching, not all these CPI reports and all that, because it's going to be something. Either Powell's going to get pressure from his colleagues, or some other outside pressure, which he's already getting now, that's going to force his hand to cut rates. And that one event is going to be the event that's going to tell you, okay, now we're pricing in a recession. And then you should already have your list by then, something I talked about, but the things you should be accumulating when that recession pricing happens, and then look for that boom cycle after that. And we also got we got the Bitcoin halving around in April 14th as well. So normally you have a major dip before Bitcoin halving, so keep that in mind. So this week we do have Tuesday, we have Walmart. I believe Targets are actually on here too. I didn't write that one down, but we have Walmart and Home Depot on Tuesday. Again, pulse of the market. That's what you want to pay attention to. What's it looking like? It could get really nasty, and so it's going to be important to watch those. And again, the big one is on Wednesday. Nvda. Nvda has driven up this market, and so their forward guidance, their numbers are going to be extremely important, because I do believe it almost seems like Nvidia is trying to position itself to where it holds a lot of the index. Like Apple holds about 7% of the index, but it's been that way for so long. I do believe the Apple Pro Visions will do very well and can lead them out ahead of everybody as well. But again, ultimately understand right now they're in a very bad part, that kind of in that transition area where people are kind of getting old. They like their products, but again, they're not being very innovative, aside from the Apple Vision Pro. But again, that's still just new. So we'll have to see. But I think Nvidia is going to get to that position where it's going to hold a greater part of the index, especially if we are in a quote unquote Cold War with China on the race towards AI. And so Nvidia is going to have to be maybe that number one spot, just to try to at least provide or navigate the narrative that we are leading in AI. And so again, even before any of the AI hype, Nvidia had dominated that sector. So you have to keep that in mind. They are very dominant in that sector. And again, the only close one is AMC, and they're they're just a fraction of what Nvidia is covering right now. Now they're all trying to play catch up, because they know the need and the demand for the space, and Nvidia is not going to be able to keep up with the demand. So yes, it'll flood over to Nvidia and maybe Qualcomm, but ultimately understand that they own so much of that sector, and it's roughly around that 80% of the whole chip sector that they own. So keep that in mind. So it is going to be a big play on Wednesday. And again, if it does bad or anything like that, that means all your AI hype is going to die. But again, cloud and everything else, all major players in the cloud space, AI infrastructure right now are doing very, very well. So that's something to keep in mind. So expected moves for this week. Again, not expecting a lot on SPX, which means, again, there's no real big event aside from FOMC meeting notes. I don't really think there's going to be anything in there that's going to really drive the market. It's probably more likely just going to change with the predictions are going to be for cuts and stuff. That's the next big thing that keeps driving the market. But again, the SPX really isn't expecting much. Tesla is expecting a bigger move this week. It's gone up a little bit, another point. Again, starting to recover despite it sold off pretty heavy going into earnings, and after earnings, it sold off a little bit more, got back under 200, but now it's starting to show strength. So Tesla's a good one to watch, as it could start gaining some momentum this week and start really pushing up. Boeing is just kind of floating around, so it's died down to 6, which has been at 7 for like ever. So it's getting back to its normal state. JP Morgan is up a little bit at 1 point. Remember, JP Morgan only moves about a point anyway. So the fact that it's up is they are anticipating a little bit more something happening this week. So just keep that in mind. There's a lot of Fed members talking. When there's a lot of Fed members talking, that can have an impact on the banks and projections, especially when you start talking about projections that can affect the banks. And on Wednesday, when we have the FOMC meeting notes, that can mess with the projections as far as when that cut's going to come. Because remember, every data set that comes out is messing with those projections on the rate cuts. And so it's changed. Like we've talked about, we were supposed to get 4 rate cuts in the beginning of last year. Never happened. Then it was March, and then now it's June, now it's July. Like, we don't know. But one thing we do know from reading the headline news is that the layoffs are accelerating at a very fast pace. We also know that AI infrastructure is building at a very rapid pace. These are 2 things that we do know. So these are things we try to keep in mind and try to have a clear, despite all the noise, and try to essentially filter through all the noise to figure out what is actually currently going on. And that is what is currently going on. So with all that being said, let's go ahead and start diving into the charts. Again, there's not tons of stuff to talk about aside from that, but all that stuff is very big and very impactful. So now that we're kind of getting out of the Super Bowl week where there was so much information all slammed in our face. Now we're just kind of getting the more, again, important stuff leading after Nvda. Between Nvda and March 11th, there's not really going to be a lot. It's pretty much going to be a dead zone at that point. And so I'm not expecting anything. It's not saying that something can't happen. But again, as long as these rates are high, something can happen to where Powell will be forced to cut. That's what you have to look out for. But aside from that, there's nothing really scheduled that's going to impact the market. So just keep that in mind. But again, we're going into that territory where we naturally sell off heavy anyway. You need to keep that in mind before we get started. So as far as SPX, again, we've been struggling. See, we hit this new all-time high at this 50.48. We rejected it obviously pretty hard. Here's our second attempt to try to get up there and got rejected again. So this key level here, new all-time high. Again, we're in price discovery mode. So once we start establishing zones up here, you're going to want to definitely have to mark them off. So this is starting to begin to establish a new zone here at this level here. So essentially between the 550 and the 518. Again, this is the daily. This is normally, my zones aren't typically this big. Normally when I go intraday, I got smaller zones that I play because obviously it's not going to move that big in a day, or it can in this day, especially with all the volatility going on. But we did fill the gap. So it'll be interesting to watch to see how this does play out this week. If we continue to chop through here, wouldn't surprise me. We may chop in here all month until we get news from first from Nvda. That will definitely play big, and then the next one being March 11th, which will be big. So that program for the banks, if that is not if that is enforced, that's going to cause a lot of problems with the banks. And so again, understanding where their banks currently are and what the current problems are if we continue to remain high and higher for longer is not a good scenario for banks or any business at this point, to be honest, or anybody in general. But again, demand has to go away, and demand's not going away. So once demand goes away and prices start normalizing where people aren't paying an arm and a leg for food, electricity, or shelter, you're going to see essentially see rates high for a while before things get back to normal. And again, it takes many years for this to play out. So again, understand we've already been in this thing for almost 3 years now. We still got a couple more years before it plays out and you see that 2% target again. Then again, ultimately understand that 2% target isn't really what you're projecting, because the numbers have been so fudged that you are paying more than 2% anyway. It's been that way even since after the financial crisis. We crumbled, and inflation has gone up from that 2% target. If you want to watch, there's a thing called true inflation, which takes out a lot of the BS that essentially is reported out there and gives you that we've been higher than that 2% anyway, probably sitting more like around 3% over the past decade. And then now, we're higher than that. Some people think we're probably more like 5 to 6% right now. You're definitely still feeling that before the pandemic. So just keep that in mind. So anyway, these levels are what we're watching. We'll continue to watch it through this week. Again, I expect chop in here. Again, on something crazy is reported from Nvda or March deadline or price cut. Those are the three things I'm watching between now and March 11th. March, again, has a lot of events in it, so we'll see what happens around March. But as of this week, that's what we're watching is these two ranges. Wouldn't be surprised to reject and come right back down here to the 4,900 and kind of just dance around here until we get some real news. So I'm expecting to kind of play this range unless Nvidia has enough to break us out. I think it's maybe some good Nvidia earnings, but then forward guidance looks bleak, so it's just going to sell back off to this bottom range. And then when we get there, we'll see if there's any other news that can drive us further down, break us back down or not. So that's what we're kind of watching there. Now, Bitcoin has been ripping back up over the past week, the past 2 weeks actually. Made new highs on this particular cycle, not all-time highs just yet, but I think that's very close for that to happen. We did come back, retest one last time to the 40K. We'll see what happens from this point. But again, people are using Bitcoin as a hedge, and I think it's more so of a currency hedge as they're concerned about what's going to happen with the dollar. They want some exposure to Bitcoin from that aspect, so keep that in mind. But again, I don't think it's still going to get affected by the general market. And you have to understand the general market. And when the market's priced in a recession, all assets are going to get crushed. It doesn't matter if you're in Bitcoin. Right? That's just the way it is. Any currency during a recession gets crushed. So keep that in mind. So that's the way you have to look at it, right? And that's the way what Bitcoin is. It's just an asset, and the asset will get crushed during a recession. That's the way any cycle works. So as of right now, enjoy the pump. It's been nice having this little pump. I'm ready for the pullback on everything, so I can just go even deeper on a lot of these. So we'll see what happens here. But again, I don't really think, it's not saying that we can't, but we're getting too close to having for me to think we're going to hit all-time highs. I think you're going to get a major pullback before then, which normally happens before having. Again, March time period. If we can price in a recession, that'd be fantastic. And then just before then, I think then you will be able to reach an all-time high there. So watching these levels, the 47K mark here, and then another big range here is a 40K mark, and then the 35K mark. Yeah, we'll have to see what happens there. So I'm excited about crypto, excited about a lot of the AI plays moving forward and how that's going to play out. This is what I'm talking about is Tesla is starting to fill this gap here back up to the 206. Looks like it's holding nicely here. Again, it sold off heavily going into earnings, which isn't normal. I had a nice run up for 2 months, and then it just sold straight off, which again is not a normal thing for a earnings cycle. And then by the time it had earnings, it just sold off a little under 200 and then kind of held, and now it's starting to push back up. And then again, you only got to go one more month, and then you're going to get into a new earnings cycle. And I do believe Tesla will bottom at some point here shortly in the next quarter or two, and it will start doing really well. Again, I love Tesla, and I'm not betting on EV. I'm betting on the technology stack that it has. That's another news event as well, is Elon did get his 20% or filed to get it. And so I like that. That was a great play by him. So now that essentially gives me more faith in the fact that essentially AI and the humanoid are going to stay in Tesla. And that in itself will be even a bigger event than EV ever was. And so it's still going to be a couple of years out, but I think it's a lot closer than people think, because the humanoid, I think, is actually developed. Now it's the point, and this has been said by essentially the engineers from the humanoid, that essentially the robot itself is primed and ready to go. It's just the AI piece of it is where they need to get it correct. And so that and the way Elon works, I think will push it fast enough to be able to get that to work. Again, the biggest thing is you got to have the bankroll to be able to do it, because it's not cheap to be able to build the models that can learn off these things, and you got to have the data set to be able to teach these things, which is expensive. That's why infrastructure is booming right now for AI, because you need a lot of resources to be able to make that happen, and Tesla has the bankroll and the resources to be able to make that happen. And so Tesla will again lead the charge on humanoids and understand where it's going. That's not even including the self-driving. That's not even including the energy side of the house that they have, right? Those are other big things. And still even the automobiles, the electric vehicles, they got a new cheaper car coming out, or being disclosed at some point, I think next year. The Cybertruck will start ramping up. It's the most talked about truck, even though you like it or you hate it. It's one of the most talked about trucks. And, once the 2 or 3 version of Cybertruck comes out, it will be even better than what it currently is. The first versions are never really the greatest, right? But it's got so much hype around it and that we're not even talking about that, right? So again, I think it's one of the best companies out there. It's led by the best CEO, in my opinion, whether you like him or hate him, right? So with that being said, we'll continue to watch and see, but could definitely start getting some momentum here to the upside. I think if this can fill this gap without being rejected too hard, we could potentially start running again. It's a lower low here, so we'll see if we can make a new higher high. I think we can definitely try to get up to that 250. Maybe even the 275 again. But we're definitely have to see. Maybe we only make it up to 234 and then come back down to the 150. But ultimately right now, we do have kind of support around that 150. So we'll see what happens there. But ultimately right now, this is definitely one I want to be buying on the dips, and I have been. So I'll continue to watch that one. Palantir, I do really love this company. It's one of the few companies that actually have a very, very good use case for their AI. And they actually came out during the Super Bowl. They came out with, go check out their YouTube channel. They actually developed this playbook type scenario where they tested 3 different computer models against all the data that they collect. And you can really see how their business, their product actually works, which gives you great insight into how it actually works, and understand you train the different models to do different things, and how you can put that essentially across any industry, and how it could be extremely helpful. And so I do really, really like this company. I'm looking for another pullback, because I want to continue to add a lot more to this one. But again, just waiting for a pullback. It's been on such a massive bull run already to this point. Once we do price in a recession, I want to see how low it can get. We see 7. I don't know if we'll be able to see 7 again, but I do think we can at least try to pull this thing back to 15, maybe 10 if we're lucky. But again, it all depends on momentum and how bad things get at that point. But definitely what I want to watch here. Again, new target could head up to 30 potentially, consolidating nicely here, roughly around the 25. So we'll see what happens here. Expect at least a touch back to the 21. If you can't hold that, maybe fill this gap back down here to the 17 mark, and then essentially go from that point. So those are the kind of areas, key areas I'm more watching. I really like the 14 as well. Really start going heavy again here if it comes back down that low. But again, I do really like that one moving forward. Let's take a look at BABA. So BABA, again, consolidating a lot, not really expecting a lot. I expect this thing to essentially just sit here until we get some sort of recessionary news. It's had a lot of bad news, but like I said, this is backed by the government, so that's the only reason it's holding the 200 mark. Otherwise, this thing would probably be a $10 stock, to be honest. If not a $5 stock, it'd pretty much be a penny stock if it wasn't backed by the government. So either way, we'll continue to watch it here. I think it's going to be stuck between the 220 and 200. Again, we played this range for a very long time. If you watched if you go back to like a couple months ago, what's back in like essentially January to June of last year, it just consolidated in the same zone forever, expecting the same thing until we determine what's going on moving forward. So just really watching those zones. It could dip down to 176, but we'll have to see. During the pandemic, I think it actually went down to 100 because I remember buying it at 100 and running it up, I think, to like 130 or something at that point. But so yeah, just really watching it to see what happens here. And then moving forward, but not expecting much from that. It is, like I said, it's got an extra point in there, but not really expecting much here. And then JPM, the last one, again, they're at price discovery mode, so it's really hard to tell what the upside potential is going to be. But as of right now, it doesn't really move more than $3 anyway. So we're really watching to see if it can come back to the 170 and can really kind of hold this 170. Will be the ultimate, so if that's the ultimate support right now. Again, it does have periods where it runs up slowly and chop slowly. So we'll continue to watch JPM. Again, not really expecting much. The FOMC meeting notes, maybe to start changing projections on cuts. Again, if there's a cut announced, that's going to definitely take a hold of JPM very quickly if that does happen. So just keep that in mind. Banks and tech will be leading that charge once that cut is announced. So expect a potential big gap down and start to run down to the, I'm not saying a full-on crash. A full-on crash, something has to come out of left field for something like that to happen, or understand overnight repo, something breaks, and then it could really lead to something. It has to be something that's not foreseen. A lot of things I talked about are foreseen, can impact the market, like pricing in recession, but when you see it coming, it's not a crash. It will slowly price it in. So it could take 2 to 3 months to price in a recession, and the market can drop 1,000 points, right? But it's not within a day, right? You're talking about a crash could be like in a week where you're selling off like, maybe 300, 400, 500 points in a week, right? So but we'll have to wait and see how that does play out. Again, this is financial. This is the debt-based system, so anything is pretty much possible. So with everything being said, if you did enjoy this video, remember to hit the like button and subscribe. And until next time, I'll see you guys on the next one.